So I'm sitting here with Mike Lempres, who was the chairman of Silvergate, deeply involved in that bank and very knowledgeable in terms of the situation. I'm very excited to have Mike, first of all. So thank you for joining us. Really appreciate it.
Thank you. You got a great show, and it's great to be part of it.
And today's a very auspicious and exciting day, at least the day on which we're publishing this episode. The Senate is having a hearing on debanking, and tomorrow the House is going to be having a hearing on Operation Choke Point 2.0. So, it's all happening in Washington. We're going to get to the bottom of this, but, I'm so glad you agreed to come on. I think it's time to tell the story from Silvergate's and from your perspective, and no one's done it yet, so couldn't be more excited to have you on this podcast. It's something we talked about a lot, but there's no substitute from hearing it from you directly. So happy you're with us today.
Oh, that's great. And there's lots of reasons people haven't been talking about it, but I think the time is right to begin to talk about it.
So I think maybe before we start, why don't you just tell us about yourself? You've had a very interesting career all across, many different areas of life, law, banking, tech, crypto as well. So briefly recap for us how you came to be chairman of Silvergate.
Sure. Well, I see myself as a lawyer at heart, with a broader background than perhaps most lawyers have. But for me, it started, I started essentially as almost a regulator. I got a White House fellowship after a little bit after law school, and worked in the Department of Justice. Thoroughly enjoyed that experience, and learned a ton from it. Got a lot of respect for the people who work in government. Then went out and practiced law, became general counsel of a stock exchange, the old Pacific Coast Stock Exchange, and went back into government to become an assistant United States attorney, and then rolled back out to become a lawyer at Silvergate Bank. And it was at Silvergate Bank where I first sort of discovered crypto. This was very early in the crypto experience. Silvergate didn't even know it had crypto clients. We ultimately found out that we had some, and the question came up sort of, can we as a bank, I'm sorry, I said Silicon Valley Bank. I hope I didn't say Silvergate, Silicon Valley Bank. Can we as a bank, regulated financial institution, can we bank these guys? So I looked into that issue. That became my issue to deal with. And I, as you often hear, went down the rabbit hole and loved it. Ultimately, it turned out that the bank's Silicon Valley Bank, made a risk-based decision that it wasn't appropriate for them to get too deeply involved. I made a risk-based decision that it was very appropriate for me to get more involved. And so I left to go join a company called BitNet, which was an early Bitcoin payments company. We sold that to Rakuten. And then I moved over to Coinbase, where I became one of the early lawyers on that team, and helped guide Coinbase through its hypergrowth period. And that was a pretty big crash course in dealing with regulators from that side of things. And been doing that ever since, essentially. Was an executive in residence at A16Z Crypto, and have been sitting on boards of DeFi, crypto, and some fintech companies, primarily offering expertise in the regulatory regimes that are out there and the best way to respond to them. I should have mentioned, I apologize, when I was at BitNet early on, I crossed paths with Silvergate Bank. It had just begun to get into cryptos around 2014 or so. And I think BitNet was one of the first 5 customers Silvergate had. So I began to know them as a customer. And then as years went on, the team there asked me to join the board, which I did in, I think, 2019. I'm not sure the exact date there, and ultimately became chair before going through this most recent experience with them.
Wow, what an incredible background. So you've seen it from both sides, being inside of the DOJ and being involved in Coinbase. So obviously Coinbase had interesting banking issues early in their history. And Andreessen, I think, intervened, I think is the story. And that's one of the reasons they were able to survive and thrive.
Yeah, it's really incredible that banks were able to pick winners and losers in the space by who they chose to bank and didn't bank. And I'd love to say there's some great science to it, but I don't think there was. I mean, I think it was much more haphazard than that.
Yeah, I mean, we're going to talk about debanking, and I started complaining about that loudly in early 23, but bank access has been a huge problem in this industry for years, and it's really a matter of if you had it, then you were able to survive, and if you didn't, it was just one of those unfortunate things about the crypto space. So, Silvergate, when did Silvergate start to explicitly focus on supporting the crypto sector?
So around 2013 is when they did that. But prior to that, Silvergate was a small Southern California commercial real estate, primarily financial institution, a bank like many others. It never really grew to any significant size. And then in 2013, they began to lean in on the crypto industry, identified that as a legal industry that wasn't adequately banked, and the demand was very strong, and so they leaned in and said, "We want to do that. We want to do it in the right way."
Now, the Silvergate Exchange Network, that was one of the things that I think turbocharged Silvergate's growth. Did that begin in 2017? Do I have that right?
2016, I believe. You got it just about right. Yeah.
And so for those that aren't familiar, this was an intra-bank settlement network. So if you were a client of Silvergate, you could use SEN to settle up in real time 24/7, right?
That's exactly right.
And this grew to be a very important piece of financial infrastructure for the crypto industry.
Yeah, it did. And the reason for that is that Silvergate itself was banking so many customers that what the Silvergate Exchange Network enabled Silvergate customers to do was settle 24/7 with other Silvergate customers. And that, as you know, it's quite clunky if you're trying to use ACH transfers or wires or something to pay somebody. And so it was much closer to instantaneous, and it was a huge benefit to people in the crypto industry.
So let's say we'll start the story in late 2022. When the FTX collapse occurred, what portion of Silvergate's business was crypto in terms of depository base?
It was not literally 100%, but it was very close. I would say 98%.
Yeah. And so even more than Signature as a share.
Oh, yes. Signature had a larger financial footprint outside of crypto. Absolutely.
So the FTX collapse occurs in November 2022. Silvergate suffers outflows. Will you just sort of recap for us what happened all the way through to March 2023?
Sure. So Silvergate grew, as we mentioned, started in 2013 looking at crypto. Took a long time for Silvergate to get $1 billion in deposits. Then fairly quickly it began to grow, and by November 2022, Silvergate was in around $14 billion in deposits. So a lot of growth, very successfully, I think, handled. Then there was, during the FTX sort of fraud and debacle that followed it, there was a run on Silvergate Bank, as there were in other institutions, by the way, at that time. So Silvergate went from 14 billion down to about 4 billion in deposits in, I want to say, 2 months. And Silvergate was able to handle that, by the way. We were able to give depositors all their money back.
Which is that's sort of unheard of for a bank.
Oh,
right?
It's absolutely. And there's a reason, by the way, that Silvergate was able to do that. And that's because Silvergate realized early on that we were in a volatile industry, right? And so we were not a traditional fractional reserve bank that would loan out 90% of its deposits. All of Silvergate's deposits, essentially all of Silvergate's deposits, were being held in U.S. dollars or U.S. dollar equivalents like Treasury bills, and that was because we knew there may be huge swings in the deposit base, and so Silvergate was, I think, uniquely positioned to survive something like that, and did survive it, which is pretty incredible. I'm trying to think. That's November, so we paid everything off, and in January of 2023, Silvergate was positioned to begin to grow back. Right, we're ready. We found the floor. We're set. Let's go build. And we all know in the crypto industry that there are ebbs and flows, and so we thought this is quite an ebb, but we can build ourselves back into the next cycle whenever it comes. We'll be ready. And then our regulators stepped in and essentially made that impossible. And we can talk about that, but it was done in both there was a couple of public statements that were made by regulators, joint statements about banks' concentrations in the crypto industry, indicating that was a concern, a safety and soundness issue. When we became aware of that, we tried to figure out a way forward. Like, what's the best way for us to deal with this? There have been, I think, published reports that regulators were insisting that banks not be concentrated more than about 15% of their business with companies that do crypto business. And to be clear, if I haven't done this, haven't said this, Silvergate was dealing in U.S. dollars. Silvergate was not dealing in ETH or Bitcoin or anything else. It was dealing in U.S. dollars. There's one small exception where there were, I think, one or maybe two loans that were secured, oversecured by Bitcoin. But other than that, everything they did was U.S. dollars. So as mentioned, there were published reports saying that they couldn't go more than 15% focused on or doing business with crypto companies. If that were the case, of course, Silvergate couldn't continue its business model.
Because you're going from 98% to 15% overnight. So what do? You can't
really
just magically find.
You can't shrink the way percentages work. You can't shrink yourself to 15%. That's impossible if you're at nearly 100%, right? So you'd have to grow or sell yourself. But there are probably some other options, and the board had a lot of big decisions to make, and we took this stuff very seriously. Fiduciaries for investors, representative of customers, employees, and explored any other way we could think of to create a new business model that would meet the regulatory needs. Unfortunately, at the same time, you mentioned Signature earlier. The backdrop to all this was Signature was not permitted to sell its crypto related deposits or its Signet, which is sort of the Sen equivalent that Signature had. And what that meant was we were at Silvergate. It was very, very difficult, if not impossible, to sell our crypto related deposits to any financial institution because they knew the regulators wouldn't accept it. So ultimately, we decided to wind down the bank, just to voluntarily liquidate the bank, which we did, and we thought that was the most prudent thing to do to protect everybody and to get find a path forward for investors, our shareholders, our customers, and everyone. Unfortunately, in that process, the net result was that nearly 1,700 customers were in effect debanked because Silvergate was shutting down. And my personal opinion is that was the intent of the regulatory demands that were made.
So I want to get into these specific events in a minute, but what has happened at Silvergate since then? I mean, it's actually still, it's being restructured is the long and short of it, right?
Yeah, so there are a lot of things happened. The first thing, we stopped accepting deposits pretty quickly in March, made this decision in March, stopped accepting new deposits in March of 23, I'm sorry. By November of 23, we had returned all the deposits. So everybody got their money back, just to be clear. There were no, the FDIC didn't need to step in. There was no deposit insurance implications. Silvergate was able to pay everybody, all the depositors back, all their funds. And then when we no longer had any deposits, we wanted to return our bank charter so that we could no longer be a bank since we weren't operating as a bank. That process is a complex one that took a long time. Through that process, to find a path forward, we had to reach settlements with all the various regulators. We did reach those settlements. We then continued to unwind the institution. We filed for bankruptcy. We're now sitting at a bankruptcy court in Delaware, and future decisions will be made or confirmed by the bankruptcy court.
So we'll come back to that later, but I want to look at the collapse. So, there's a lot of factors that you could look at and say, okay, that was the factor. Because if you look at a voluntary liquidation of a bank, basically never happens. I looked into it. There's not a lot of examples, certainly not of a good sized bank. Okay. So I think that in of itself, if I may editorialize here, I think that's very suspicious, right? It implies there's some sort of exogenous force there. So there's almost never a voluntary liquidation. So then the question is, what drove that? And you're telling me you had short dated maturity assets backing the deposits. So you were able to handle the outflows, unlike a bank that suffers a classic bank run where they can't meet liquidity, they have a liquidity or solvency crisis. That wasn't really the case here. So, with a lot of the other banks during this crisis, they had longer dated assets. Fed raises rates, value of those assets declines, they have a kind of like a classic issue. Then there's obviously, what's been reported, like in the day one bankruptcy filing, the CAO, Elaine Hetrick, echoing what you've just said. She said the increased supervisory pressure on Silvergate forced Silvergate to a point where it would have needed to remake its business model away from its focus on crypto asset businesses, seek to selling itself as going concern in the shadow of regulatory overhang. That was a more recent filing that came out. There is the fact that Elizabeth Warren had written some very nasty letters about to Silvergate leadership. There was a short seller campaign. So, I mean, is it just the totality of these factors that were ultimately responsible for the wind down? How do you sort of like rank them?
No, I wouldn't say it was the totality of factors. I think it's actually pretty simple. And there were, short sellers, and there were, you mentioned Senator Warren took activity that was either exploited by or coordinated with the short sellers, which
Right.
was harmful. But really, the issue for us was as simple as we had a business model. It had been in place for 10 plus years, at that point, and our regulators said that business model is, we can't allow that to continue. That business model is not acceptable to us. And so then we as a bank had to figure out a way to pivot away from that to a new business model. We couldn't identify one, just couldn't identify one that would get a good result for our shareholders and our employees. So we had to just shut down. We thought that was the right thing to do. And you're right, by the way, voluntary liquidation is extremely rare, to the point where our primary regulator was our charter was out of California. I don't think they'd ever seen it before. They didn't really know how to handle it. And so that was something we all had to work through together.
So Elaine Hetrick's day one filing, you agree with her characterization there that I just quoted?
Yes, I do.
So is it fair to say that hadn't it not been for the regulatory shift, Silvergate could have, post bank run, post FTX crisis, resumed operations and been a functional bank today?
Yeah, I think more than functional. I think it could have been a successful, compliant, well-run, much larger institution. I mean, given the nature of crypto and the recent run-up we've had as an industry, and the fact that the industry is maturing and growing, I think Silvergate, it was a indispensable, I thought, part of that ecosystem, and it would be bigger than ever in my view.
So devil's advocate here, a lot of critics tell me, I've obviously written about debanking stuff, which I'm sure you're familiar with. They say, well, crypto is a risky industry. Should banks even be allowed to bank it? Shouldn't it be ring fenced from the traditional financial system? What's your view on that? Like, how would you respond to that?
I'd say
Refrain.
yes, crypto is a risky industry by traditional banking standards. And what that means is banks should be thoughtful about how they approach it, and regulators should be thoughtful about it. It's a legal industry that's changing the nature of finance and will be changing the nature of other industries in the future. It's a critical industry, I think, for the future of the American economy. I think it needs access to the banking system. If it doesn't, by the way, it won't be in the United States. It'll just go elsewhere. And the risks we're talking about are risks that can be handled. I mean, as I mentioned, Silvergate survived a very large run of the bank by traditional standards, and did it just because it recognized we're in a volatile industry. There are some special things about crypto. Now, there's still a very successful business model to be maintained while being careful and prudent. That to me, yes, there are risks that are unique to crypto, and there are ways to deal with them, and it's not even that tough, to be honest with you.
So because I always hear from regulators, well, okay, maybe banks can serve crypto, but it should only be a de minimis part of their business. Crypto's too volatile, balance sheets expand and contract, and we don't want banks dealing with that. But you're telling me Silvergate had found the resolution of that, which is hold short-dated maturity assets, cash equivalents, so you can deal with those outflows when and if they occur.
Yes, and not only that, it was stress tested in real life, and it survived.
Yeah.
So yeah, that's my opinion on it anyway. I'm very comfortable that banks should be supporting the industry, and that if banks don't, I think there's collateral consequences for the U.S. economy and competitiveness and everything else.
So one thing I have to address, and when I started looking into Silvergate, a lot of people told me, well, actually you shouldn't be sympathetic to them because they banked Alameda or entities associated with them. So of course we have to address this. Silvergate did serve some of the entities that were in the Alameda slash FTX apparatus. What's kind of Silvergate's version of that story?
Yeah, we did bank Alameda first, and then FTX and a couple of entities. A significant part of our business. They're substantial customers for Silvergate. The story is pretty simple. We've got a lawsuit against them. We were victims, and I'd argue double and in some ways triple victims of a fraud that was perpetrated. I mean, we asked questions, received answers that made sense, that were just completely dishonest.
Yeah.
I would also note that it's not just Silvergate who claims that we were defrauded by FTX, but it's the Department of Justice has recognized, and in fact, in the Sam Bankman-Fried trial, we were identified as one of the larger victims of his actions.
Yeah, and I mean, this was one of the refrains I heard from the short sellers or after FTX collapse was, Silvergate aided and abetted. I mean, it's just the opposite. You guys were a victim, and that is
We absolutely were a victim. When I mentioned a double or triple victim, we were a victim to the FTX actions in the sense that they were a customer, and they, we lost funds there. The second way we were a victim was that there was a run on the bank that was directly linked to that. It affected the whole ecosystem, but it was very much a run on Silvergate. And then the third way we were a victim to this, I think, was the regulators' actions. I don't know what drove the regulators' actions towards Silvergate, but they followed shortly after FTX. And I think it makes sense that there was a reaction to the FTX matter, and the ultimate result was to close Silvergate, not to allow them to move forward.
so financial loss, reputational loss, change in regulatory outlook. I mean, it doesn't get worse than that. Now, in terms of basically no one saw the FTX fraud coming. We received the FTX pitch back in the day. We passed on it because we just didn't think Sam was very credible, believe it or not. But with the benefit of hindsight, do you think the fraud could have been detectable from looking at the flows between the entities that banked with you?
I'm sure with the benefit of hindsight, you could identify things. Everybody could. I'll tell you that there are a couple of things. Banks do have obligations on a lot of their customers, absolutely no doubt about it. But there's an awful lot that banks never know about what their customers are doing, and it's impossible to know about what all of your customers are up to at all times. I think that as technology gets better, we are, as an industry, the banking industry, getting better and better at catching fraudulent activity and other things. I think given the state of the industry at that time, it would have been probably not impossible, but extremely difficult to identify those in advance.
Yep. And it is an interesting feature of the banking system that banks are expected to be cops. They're deputized, and they're meant to be doing this non-bank activity, which is being cops for their clients. And it's just, there's only so much you can figure out. Now, I want to talk about Signature as well. You brought them up. Barney Frank did speak out after they were sent into receivership and sold off. He said they were basically killed because their association with crypto. As you said, their crypto deposits were not included in the sale to NYCB. The Signet product, which was also a very popular settlement product, that was not sold. I mean, this is all pretty suspicious, right? They at the 11th hour, Barney Frank claims they're solvent. They're sent into receivership. We don't know what's going on there with NYDFS. Then the crypto part of the business is stripped out and not included in the sale. This you view as equally as suspicious as I do, presumably.
Absolutely. I mean, I think it's very clear that the regulator is sending a message to the broader financial system, telling banks that this is not something we want you involved in. I don't think Signature is even given the opportunity to try to raise funds there. I think that they were taken over very quickly, and the crypto assets. It's strange to me that the FDIC, who's got a mandate to maximize their return, chose not to sell assets that had real value. But that's sending a message.
So I want to look at SEN as well here, Silvergate Exchange Network. So at the time there was SEN and Signet. The value of those networks was because you had a ton of clients that were all onboarded with you, and they wanted to settle with each other, market making firms, trading firms, exchanges, stable coins, settle at all times. Very useful. It's one of the things I regret still, frankly, about this whole situation is the loss of Sun. Now, in the case, in the ultimate settlement with California financial regulator, and I think echoed by the Fed, the CAFP found that Silvergate had, quote, deficiencies with respect to Silvergate's monitoring of internal transactions. Can you sort of elucidate what happened there?
Yeah. In the first place, let me get back to those settlements. What there is allegations, and just to be clear, as part of that settlement, Silvergate um, neither admits nor denies the accuracy of those allegations.
Yeah.
Um, the but the upshot is there was the allegations were that not all internal transfers were sufficiently monitored, electronically monitored in real time. Um, the Silvergate's response to that was several fold. One of which is that there's no legal obligation to monitor internal transfers, and they were being monitored um, to the best of our technology at that time. They were being monitored manually and with investigative work until we were able to get systems up in place that were monitoring them real time. And that, in fact, I believe Silvergate was the only, maybe Signature was, but Silvergate was the only bank in the country that was actually monitoring internal transfers in real time. And that, so that's what it was. But
I see.
because of the Send network, we had a large number of transfers that were staying again within the bank, but were rotating around between customers in the bank. And to be really clear, I think everyone agrees that meaning the agencies and everyone else, that when any payments left Silvergate and went outside to another institution or another customer, they were properly monitored at all times. So the issue was limited to allegations about the internal transfers.
Yeah, and I mean, I think that's something that many people did not understand about Sun is that every Sun transaction was happening between a client that's already known to
Yeah,
Silvergate.
and had already been through the entire KYC and onboarding process at Silvergate, which was it, at that time and to this day, I think was recognized as among, if not the most stringent in the industry.
So I also want to acknowledge the settlements with the Fed, the SEC, and the CADFP. I know you're limited in what you can say about them, but it's sort of the long and short of what the resolution was there.
Yeah, I mean the resolution was, again, as a board, we made a decision to shut down the bank, and at that point we had to move forward. And so the only way we could see to move forward in any kind of reasonable time frame involved reaching a settlement, and we thought that was the prudent thing to do, the financially responsible thing to do, and the right thing to do as fiduciaries for our shareholders and everyone else. And now it's a shame, by the way, because what gets lost in all this in the shutdown is, 500 employees lost their jobs, and 17. I don't know how many jobs were lost by the 1,700 clients of Silvergate, but there were a lot of jobs lost and a lot of people harmed. And in my view, it was unnecessary.
I sit on the other side of the table, right? I represent the startups that are trying to be banked. And this is why I got so interested in the issue is because our startups were debanked. So from my perspective, capital formation, startup growth was significantly impaired by the loss of Silvergate and the general loss of banking.
Yeah, no, I agree with that.
Were you surprised at all that Silvergate's primary regulators plus the SEC, the securities regulator, came for Silvergate after the liquidation, the announcement of the liquidation of the bank?
Yeah, the whole thing was surprising to me. I will say that I felt very naive about the way I had lived my life up until until a couple of years ago, when the regulators came after us, because the entire process felt very political and very divorced from reality. And unfortunately, there's a lot of examples I wish I could go into. We're not permitted to, but it just felt like the whole thing was political, and that they were not, in my view, they were not serving the American people well, or the people of California well, in the way it was approached.
So speaking of not serving the American people well, I want to talk about Diem. No one ever talks about Diem here. So I briefly had a footnote about Diem in my last article because it's just this whole other story. And then after Coinbase started making progress in their FOIAs against the FDIC, then I had, David Marcus talking about Diem saying, they were rug pulled and That was such a long saga, but Silvergate's involvement was, I believe Silvergate was meant to be involved in the Libra consortium. And then Silvergate ultimately bought the DM assets. And then that IP was just basically shuttered. It became worthless. Will you tell me from your perspective what happened with DM?
Yeah, I, I enjoy reading David Marcus's stuff, and David's exactly accurate from my standpoint on how it was handled up to the point he ended his involvement. Where Silvergate came in is, and I will say, it goes back to, and maybe you can view this as another rug pull, but it goes back to January 2021. President Biden, had a working group that looked at stablecoins and stablecoin issuance. And among the things they did is this presidential working group on financial markets, it was called. They said stablecoins should be issued by by an insured depository institution. And Silvergate, who'd been at that point, we've been in this space for a long time. We felt like we were sophisticated in this space. We felt we were uniquely positioned as perhaps the only insured depository institution that really understood the space. And so we're familiar with Libra and DM. And so ultimately, Silvergate purchased the DM assets, intending to move forward and to start issuing a stable coin through that technology. Unfortunately, what we found is that the regulators again changed their posture on that. We were never able to get it approved, and it ultimately became an asset of the bankrupt estate, which is what it is right now.
So Silvergate got the impression from the Biden administration at the time that Silvergate would be a suitable home for the DM assets.
Yes.
And then that was just radically altered. I mean, especially in 2023 when the Fed said they didn't want banks to touch stable coins.
I think that's exactly right. Now, by the way, I'll mention the Fed has now swapped positions pretty dramatically, right? I mean, it's been interesting to me. The Federal Reserve Bank was a major regulator of Silvergate Bank. We went through this adventure with the Federal Reserve, and then I see Chairman Powell of the Fed making statements, and I think his most recent statement said, we're not against innovation, and we don't want to take any actions that would lead to debanking. In my view, that's a very significant pivot from where they were in their dealings with us.
Yeah, I mean, even from the public statements, in Jan 23, the Fed, the FDIC, and the OCC had the joint statement. They said crypto is a risk to the safety and soundness of banks. Then I think in August of 23, the Fed comes out and says, look, banks can do stablecoins, but you need a permission slip from us. Basically implies you can't do stablecoins. You had SAB 121. If you're a bank, you can't really hold crypto assets on behalf of customers, basically. I mean, the whole posture was maximum hostile, and it's remarkable that Jay Powell is changing his tune. I mean, just a few weeks into Trump's administration.
I'm going to say it's thankful that he is, and I'm going to appreciate the fact that he's willing to move forward, hopefully. And he said nice words. I mean, they've said words before, but I think this time there's more to it. I think this time there will be some change coming. I think the Fed will be more responsive, more receptive to innovation in this space.
So, speaking of changes in Washington, obviously we have hearings in the House and the Senate around debanking, one specifically referencing Operation Choke Point 2.0, which is what we in crypto call the whole saga. The story doesn't just end there. The new interim chair at the FDIC has said he's going to look into it. Trump himself said he would end Operation Choke Point. David Sachs said he would end it. So it's market tonal shift in Washington. I think we will get information. How optimistic are you that the hearings or maybe congressional investigations will surface more information about what happened here in terms of the regulatory shift?
I'm very optimistic they'll surface more information about it, and I think there will be some changes, which I think is great. I think, unfortunately, all the changes that we're going to see deal with, we're fighting fights that we never needed to fight in the first place, from my perspective. There are some real issues that the crypto industry needs to to figure out the right way to address. I mean, from my perspective, BSA, AML issues are significant. We need to figure that out. Exactly how are we going to make that work? Sanctions. We got to make sure that we're on top of it. There's a lot of real issues. This debanking one is a political issue that was created and didn't need to happen.
In the hearings, if you look at the witnesses, there aren't a lot of bankers actually. So there's Nathan McCauley at Anchorage. They have a charter. I'm not. There's one banker from Old Glory Bank, which I don't know much about actually. But you're not hearing from Signature. You're not hearing from Silvergate. Why is that? Are there prohibitions on executives of these organizations sharing their story?
Short answer that there's no prohibition against them appearing before Congress, but there's absolutely restrictions on what we can say and can't say. And I've talked to just during this conversation we've had. There've been a couple of times that I would like to talk about that. You have to stay away from what's known as confidential supervisory information, and it's actually a violation of criminal law to disclose confidential supervisory information that you receive from your regulators. That is normally intended to be a shield for banks so that they can receive candid information their regulators not have to share it with the world. But in this case, I think it's being used the other way. I think it's being used to shield the regulators because anybody who goes to testify would have to be concerned about the possibility that they'd violate the law inadvertently. So that's a big part of it. I'd say another big part of it is, many people are still facing lawsuits and other things that they don't want to create exposure for, or they're continuing in the industry. And if you're continuing in the industry, you for sure don't want to tick off your regulators. So I suspect that's what's going on.
And that's the thing that struck me about this is there's such a lack of a paper trail. There's so few people that are willing to go on the record. I mean, I'm incredibly grateful that you chose to speak with me today. I know it takes a lot of bravery to do that, given everything you've been through, but frankly, the continued threat of settlements, enforcements, etc. I mean, the CSI doctrine makes it hard to speak. The threat of lawsuits, regulatory harassment makes it hard to speak, and I'm just hopeful that maybe congressional investigations will reveal the thought process at the regulators. But I guess that's to be determined still.
Yeah, I hope that comes. One of the things that I'd like to make sure people understand is that you're extremely unlikely to see a smoking gun memo sent from a regulator to a bank. That's just not the way bank regulation works. Bank regulators have such plenary authority over the banks they're regulating that just if they merely ask a question, it's enough to cause most banks to debank someone, right? If they're just, a side-eye glance is almost all it takes. And it's a shame because this stuff should be done in a more transparent way. But from the banker's standpoint, you're not going to risk your whole institution for one customer. And if the customer is causing any concern at all for your regulator, the odds are high you're going to drop that customer.
So I have a wish list of changes I would like to bank regulation. Not that I am an authority on it at all, but I have been spending a lot of time on it over the last 2 years, almost to the day, actually, is when I first published my first article. And I have things that I want. But if you were in charge of reforming bank regulation, what changes would you make to the way it works?
Yeah, it's interesting. I think my biggest takeaway from all this was simply we were getting away from the way it's supposed to work. Like that was the biggest problem we had, is that we were not, people, from my perspective, the regulators were getting involved in political issues, or there were political calls being made in Washington, D.C. that were being communicated down to the regulators. So they were actually not, from my perspective, using their best regulatory judgment and acting in a good faith way to fulfill their mission. They were instead being directed to do certain things. So I don't think the issue is primarily a legislative one. I think the issue is more congressional oversight, which I'm glad they're doing it, a change in administration, which I'm glad there's been some accountability. And I think, by the way, the crypto industry actually did instill some accountability by getting involved in elections, both in the presidential and Senate and other areas. But I don't have any specific legislative changes I would make. You made a reference to the fact that a lot of the enforcement work, the police enforcement work of a government has been offloaded to financial institutions. That is absolutely true, but I don't think that's likely to change. And that's where a lot of this issue is. That would be a legislative change, but I don't think it's one that can get through.
As long as the Bank Secrecy Act is in place, that's not going to change. Now, in terms of the Trump administration's ability to tackle this, it's been a stated priority. I'm very excited to see both houses looking into it. Your level of optimism around basically getting to the bottom of this or resolving it is fairly high. Is that fair to say?
Yes. Yeah, I think the administration is taking aggressive, good steps in this area. I think Congress is looking into it. You know, it's very difficult to get to the bottom of regulatory matters. People are pretty good at covering their behind, and they probably did so there. One thing I'll mention is as you're looking forward, we talk about regulatory actions in the future. I am confident the federal government is going to focus on what real issues in this space, and I think I know people in the industry should know that they can't get away with acting like there's no regulations. There's going to be a lot of regulatory enforcement. You got to be careful about everything you do. And I mentioned BSA, terrorist financing, sanctions, all kinds of stuff that we need to be very careful about. But I think the big change coming in the future is not going to be coming from the federal government. I think states are going to be stepping up in this space, and I think the industry needs to be aware of that because for better or worse, right now, crypto has become a political player and identified as a political player. And I think what that means is that there will be states where attorneys general and governors and others, regulators, will seek to make political points by going after the crypto industry. And they do have the authority. There's a lot of consumer protection. There's a lot of state blue sky security laws. There's other ways states will be involved. So, I don't think that the change in government in DC is some kind of panacea for the industry where it's all going to be, roses, but I do think it's better. It's absolutely going to be better. It's making I think it's going to be a big change. And I think it's going to enable US companies to get back to doing what they should be doing, which is building good companies, providing good services. So I think it's taken a couple of worries off the table and maybe it's added one or two others.
To my understanding, this is one of the first times you've spoken on the record since the dissolution of Silvergate. If you wanted to set the record straight on something that we haven't covered today, what's kind of a misconception about the bank that you want to resolve?
It frustrates me that people think that somehow Silvergate was in some ways in cahoots with FTX or anybody else and was a bad actor in this. I am 100,000% convinced that Silvergate was not a malicious or bad actor. And that's a message that's got to get out. I'm also extremely frustrated by the fact that short sellers, sometimes working with congressional and Senate office holders, are able to just say outrageously false statements with complete impunity. And we need to figure out a way as society. You ask for a regulatory or legal change. I would love to see short sellers face some liability for making malicious and false statements in kind of a reverse pump and dump because they're trying to make money by driving the stock prices down. That I would love to see. But that'd be the biggest thing. I mean, other than that, I think people should know that from my perspective, Silvergate was a bank that tried to do it right. And I think did do it right, not perfectly, but did do it right, and was, in my view, killed unnecessarily by regulators. And there's a different world where that didn't need to happen, and it makes me sad that that institution is gone, and as I mentioned, the employees are gone, the investors lost their money or a big chunk of their money, and all the customers are out scrambling, still looking for banks, many of them.
Yeah, and I actually forgot to ask this, but like in terms of the future for common or even preferred shareholders, is there a case against the government? Is there a regulatory takings case? I've heard this idea batted around. Is there any kind of prospect of recovery beyond the assets that exist in the bank?
All that's in the bankruptcy court right now. There isn't. I mean, any lawsuit is an asset of the bankruptcy, the estate. And it will not be my decision how to pursue that. A U.S. trustee or a bankruptcy court will be approving any action like that. So I don't know whether it's going to go forward, but to the extent there's a claim, it belongs to the estate.
In terms of your next steps, I mean, we haven't talked about that at all. What's your plan?
I'm excited about this industry. I'm excited about the sort of little niche role I've managed to carve out in it, which is to help companies deal with regulation and help help banks deal with it. I don't know what my next step. I'm active now. I'm on I'm fully busy. My plate is full right now. I don't see any particular change coming. Um, but I'm excited by what the next few years are going to bring. And I think some of the companies that I'm working with are going to be quite large and quite successful. And it's a ton of fun. I also think, by the way, that somebody else is going to recreate Silvergate Bank. It's going to happen. And it's a shame it's not going to be Silvergate, but that somebody else is going to be offering those same services to this industry and is going to be very successful at it. And assuming that they're careful, and I'm sure they will be, and that the regulators are prudent, we'll end up with a safe, secure financial institution that's offering all these services. And I'm hopeful that Silvergate's 1,700 customers and all the other customers out there are able to get bank accounts, get back into the economic system of the United States.
Well, I mean, despite the ordeal that you and your colleagues went through, like I'm very heartened to see that you are still optimistic about the industry. I don't know if I would be, but it's really great to see. And
It wasn't the industry. I don't feel like that. That anything that went wrong at Silvergate was not the crypto industry. I mean, obviously FTX would have been better if that hadn't happened. But the strengths of the industry so far outweigh any weaknesses. And I think the issue that Silvergate had was honestly a change in policy with the regulators that in my view was done in the dark in a back room somewhere without proper public discussion, and that's now been corrected. A new president was elected in part on that, and so I'm very optimistic actually where this is going.
well, Mike, I can't express my gratitude enough. Thank you so much for coming on and sharing your story with us. And it's been such a pleasure to have you on.
Great, thank you. And thank you. I should have said early for the reporting you've done in the space. It's been, I think, spot on from my perspective and very helpful.
Well, here's to things getting better.